Hey everyone, welcome back to the channel. We are with you again for another live stream. This time I actually have my business partner, my good friend Roman, on the call with us. So we're going to get into it. Today we're going to highlight the new app. So I talked a little bit about that on the last stream. And I mentioned a free trial, and that is actually available now. So I'm sure Roman will get into that. And without any further ado, do you want to go ahead and share your screen? Actually, let me go ahead and take care of that, Roman, and introduce yourself.
Absolutely. So I actually exist. I'm the other party member in Overseas Defi. So
You're
I know
not
you
an
guys
AI.
I'm not an AI.
At least not right now.
Not right now. Yeah, we've got a long way to go before that happens. But I am really excited to talk about a few different things today, AI being one of them, and specifically how we built a really cool AI agent and DeFi platform to not only educate you on everything that you need to know about decentralized finance, but also to have a co-pilot, a research assistant, a partner to help you make the best decisions when it comes to managing your portfolio and profiting in decentralized finance. So a couple things we're going to talk about. We'll review the platform, like I said. Then we're going to talk about how to turn your existing Bitcoin into, or not just Bitcoin, but cryptocurrency into consistent daily cash flow. A lot of people think, you know what, I own Bitcoin, I own Ethereum, I own Solana, and I have to sell it to profit and pay a big chunk to the IRS, or I have to sit here and wait or day trade. And you know how that goes. So we want to talk a little bit about how you can actually generate real income to pay for your bills, your mortgage, life. And we're going to talk about how you can consistently earn, 5, 6, 7, 8% per month. And I know that sounds crazy. If you're listening to me and you're wondering, you know what, is that per year? No, that's on a monthly basis. And Brandon's going to jump into it and show us how it's done. But before we
a couple of things, Roman, you mentioned the AI. I did get into that a little bit last week, as well as the video that we just posted on Tuesday. And I mentioned how it's really helpful to sort of get that DeFi coach instructions out of it. If you get stuck, you can ask the AI. And our AI is really special in that way. It's completely trained on all of our frameworks, everything we teach in crypto and DeFi. That AI is aware of that. And one thing I didn't mention is one thing that you just mentioned loosely is that the AI in your app is aware of all of your positions. So it understands the spot assets you're holding. It understands the liquidity position you're running. It understands your lend borrow position, how much collateral you have, what you're borrowing. And so it's context aware. So it goes well beyond just an ordinary, ChatGPT instance.
You're stealing my thunder here.
That's my job.
Yep. Well, let me share how you can get started with us, and we'll jump right into it. So for those of you who are interested, there are a few different options in how you can get access to the platform and start working with us. The first way is we have a community offering. It's $97 a month. You can cancel anytime. You get access to the world's first DeFi-trained AI coach, and we'll show you what that looks like in a moment. You get the live portfolio tracker, the liquidation simulation tools that we bring to market. You get a full 17-module video course, and you get one weekly live stream where you can ask questions and learn about different topics that we bring to the table. And then we also have an accelerator. So this is great for those of you who want to accelerate your decentralized finance journey. You're interested in everything that's included in the community, but also weekly live cohort calls, a macro portfolio community call where we talk about everything that's happening in the markets, talk about all the different protocols that are out there. Where can you earn yield? And then we discuss all the things that you might want to learn about liquidity pool management and leverage and hedging and all those different things.
Don't forget to get a private Telegram group. That's my favorite.
Yes. Yeah, absolutely. You also get a private Telegram group with direct access to the coaches, and you can track your course progress. So with that being said, let me jump into it and show you what it looks like.
You mentioned earlier about how, a lot of people own crypto, but they're not doing anything to generate cash flow. It goes even deeper than that. Most people, the vast majority of people that invest in crypto assets, they don't even technically own the assets. They leave those coins and tokens on the centralized exchange, not your keys, not your crypto. So that's the first part of anything that we do here at Overseas DeFi is self-custody.
Yeah, absolutely. So when you log in, this is the main dashboard that you see, and you've got 4 different areas that you can jump into. So you have the portfolio tracker. This is where we can get a real-time view of all of your DeFi positions, your spot balances, and exposure across all the different chains that we support. So today we support Arbitrum, Base, and Ethereum, and very soon we're going to be adding support for Solana, for Sui, and a few other chains. So if that's where your bags are, just stay tuned. But today, again, support Ethereum, Base, and Arbitrum. Then we have the DeFi Academy, and this is where you can see the workshops, the community calls, the courses. This is where you can join our live program and our calls. You have the market intel area where you can see crypto news, macro signals, DeFi rates, all the macro stuff. And then we have a discussion board where you can post questions and we'll obviously answer that. Now, let's start off by looking at our DeFi Academy. So here you'll see the workshops, community calls, office hours. You can join our calls directly from here. And every time we put out a call, you'll be able to see not only the timestamps, but also download a transcript and get a study guide. And as Brandon mentioned, our agent is trained on everything that we've ever put out. So not only will it give you personalized guidance as far as like what your portfolio looks like, what moves you should probably consider making during certain market conditions, but it'll also surface those videos that are in our library to the exact point where we teach this stuff. So it makes it really, really easy.
Yeah, reading a text response from an AI agent is very helpful, but sometimes it's really helpful to actually see a real human being explaining something on the screen, showing the different protocol, the websites, clicking here, clicking there. It goes beyond just that AI agent. The AI agent is incredibly smart, very helpful as you're going through this process. But it's also really nice to actually have a real human being once in a while too.
Yes, absolutely. I think human-led learning is very important. So if we move over to the portfolio tab, so the first thing I want to do is I want to connect my wallet, right? So let me just do that. Takes about, I think we got it down to like 6 to 7 seconds. Hopefully this demo doesn't blow up on me, but there you go. So in this specific wallet, you can get a nice view across your entire portfolio. So you can see all your liquidity pools, your Aave lending borrowing positions. If you're utilizing Revert and you're more of an advanced liquidity provider, you might have some leveraged positions with Revert. You can see all of that here, and we'll drill into that in just a second. You can see all of your GMX shorts and longs, so your perpetuals. So if you're like to play around with a little bit of leverage, all of those positions will be visible here, your spot assets, and then your delta exposure. So one of the things that we like to teach is how to hedge, because I think in the current environment, you need to protect your downside. So if you're interested in being delta neutral, where you're not exposed to the market, if it goes up, if it goes down, you don't appreciate, but you also don't depreciate, and you're just collecting fees every single day. Well, this is a great way for you to actually see, well, how many longs do I have? What's my short deltas? What's my overall net delta? And we can jump into that in a moment. But yeah, let's start off. Yeah.
I just wanted to mention, you mentioned the deltas and neutral, and you don't appreciate, but you don't depreciate. That is, I've been doing this for many years now, and by far the most common objection to what we do, which is providing liquidity, is, well, what about the impermanent loss? And it's not even the right term, but the basic fear is I'm going to provide liquidity and I'm going to lose value. The prices are going to go down and I'm going to lose all the value that I put into that position. And we can completely offset any potential loss based on the price going down with those hedges, which is what you got in where you mentioned the GMX is one way to hedge. Shorting crypto on Aave is another kind of interesting way to hedge. So we can always cover those risks. But there are trade-offs as well, so we can definitely get into that. And by the way, I just wanted to mention right now we're listening to Roman. We're looking at the new app. But if any of you are tuned in and you have a question, please do feel free to ask any question that you would like. We'll definitely leave some time to go over Q&A.
Yeah, absolutely. So let's jump into the liquidity pool section. So this is where all the positions are shown that are associated with this wallet. And right now we're looking at a leveraged position on Revert. So you can see the total pooled assets. You can see the uncollected fees, the overall fee APR. Because it's leveraged, you can see the borrow APR, the health factor, your equity, the debt, the leverage. And what I really like is you can see what your liquidation price is on this leverage liquidity pool, all in one single dashboard. Now, this position was recently opened, so you can see that there isn't a lot of activity, but we've also built in a fee tracker that I'll let Brandon speak to in just a moment because, well, tracking your liquidity positions and the fees with all the rebalancing that you have to do can be challenging, and we have solved it, and we're really excited to bring that to market. It's still in beta. We're going to launch it hopefully next week, but just know that that's something that's available, and you don't have to live in your Excel sheets anymore. It's going to be a really, really valuable
What's wrong with
feature.
Excel, man? You're going to hurt my feelings.
I mean, we're living in the age of AI. I think we can upgrade our
Of course.
our tracking, right?
Yeah, no, I mean, literally, it makes my job so much easier as I'm teaching people how to track their liquidity positions. It was always really convoluted to show my spreadsheet, and here's the formulas, and here's how that works, and not to mention all of the manual data entry. So I'm incredibly excited about the fee tracker and just having all of that completely automated. You know what your average yield is. You know what you've put into the position, what you've been able to withdraw, all of that. So it's going to be really nice.
Absolutely. Now moving on to the lend borrow. What's great about this is we connect directly with Aave, so we can see your positions. You can see everything that you're lending, everything that you're borrowing. But right away, you have a nice clean snapshot of what your health factor is, and most importantly, how big of a drop can you survive, right? So this is saying 46%. You can sleep easy at night with that much room to breathe. And you can even see the exact liquidation price that you would get liquidated at. So $1,200 on ETH, $41,000 on Bitcoin. And typically you'd have to do these calculations manually. So it's really nice that we can surface that up to you. And not only do you know about it, but the agent knows about it as well. And it can provide personalized guidance. And we'll show you that in just a second. Now, the other piece that's nice is you can run some simulations. So if you wanted to see, well, what happens to my portfolio if there's a 20% drop, right? So you just move this down to 20%. You can see your new health factor, your new LTV, and everything here is dynamic, right? So if you wanted to reset that, you could do so. And let's say you wanted to pay off all of your WETH debt as an example, right? So you just put 0 there, and now you've got the numbers changing, and it reflects what your portfolio would look like. The other way to do this, and if you wanted to play around with it, you can swap your debt directly down here. You can repay the debt, and you can run some borrow simulations, and all the numbers will update automatically too. And then you can link multiple actions. So if you wanted to swap some debt, and then you wanted to repay a portion of it, and then you wanted to borrow some additional crypto, well, all of that would be reflected, and you can chain those events together. So, and you can have multiple positions, right? So there's one for Arbitrum, and you can see all those different numbers, and you can see one on base up here. Now, the other piece that we show you is your perps. So if you have a short position, in this case, you can see the total P&L, you can see your short deltas, you can see your liquidation price, everything you need from a single dashboard, which is great. And then you see your spot assets as well, right? So everything that is in your wallet. Brandon, do you want to take a little bit of time and maybe walk through the fee tracker? I know it's not fully out yet, and hopefully I'm not supposed to be doing this, but here we are. So maybe chat a little bit about what this brings to market.
Sure. Yeah, I will go ahead and switch us back over to my screen, and we can take a look at the fee tracker. It's very close. I've been working hard, as you know, on the development and getting the last of the bugs worked out. And by the way, this number is not accurate. It makes it look like I've only made $11,000 in fees since a year and a half ago, which is not accurate. It's one of the bugs I still have to fix. But the basic idea here in a nutshell is this allows you to see any open positions as well as closed liquidity positions. Here you can see the token pair that you're providing liquidity for, the date that position was opened, and you get an idea of how much in fees you have collected so far on that open position. And then, of course, you can review previous positions that you've already closed out, and you get some statistics on those positions. Where the real magic happens, and again, there are still some minor bugs and kinks to work out on this, but you have the full history of the position. So this position I've been running for about 106 days since the mid-January. And so if I reverse it by the date order, you can see the very first deposit. I put the position on revert, which is we're not really going to get into. It's a protocol where we can add leverage to the position to juice our fees. But every time you collect fees, you can see that here, and you get the full track record of the position over time. It's really useful, and it completely replaces those archaic manual data entry spreadsheets that we have. So that's pretty much it. And then eventually this fee tracker will build into the LP positions tab, where you will get a complete picture with all those lovely details that you can see on the liquidity positions as they are sitting here open on the exchange, as well as being able to examine the full history of each position and closed positions as well. So those will meld together.
Cool. Am I still sharing, Brandon, or are you sharing?
I will switch it back to your screen.
Cool. Yeah, I just have one last thing I wanted to run through, and then let me know when I can go.
You're on.
Okay, cool. So I wanted to show you the functionality of our agent where, let's say we wanted to better hedge our positions, right? So maybe we start out by saying, how do I hedge? And how hedged am I right now? And pardon the spelling. So it's going to take a little bit of time, but it's essentially scanning our entire company IP, all of our strategies, everything that we've developed as a company over the last 12 months. It's looking at your exact portfolio, right? So you can see your positions on, in this case, on Aave, your liquidity positions with revert, on base, on Arbitrum. It could see your perpetuals on GMX. Shows you everything, and it gives you a really good overview of what's actually working, what's not working, things to keep in mind. And then at the bottom, you can see the hedging strategy and position sizing video. So if I click into this, this is going to take you directly into the video where we talk about setting up a hedging strategy. So I think it's great that you can, again, learn and learn through text, but then it's always nice to be able to go and watch and go from there. The other piece that we have is the market intel. So with market intel, you can see, the fear and greed index, ISM manufacturing, all the economic indicators. And what I really like is at the bottom here, we have a weekly newsletter that we launch. I shouldn't say weekly. We do this 3 times a week on Mondays, Wednesdays, and Fridays. We give you our take on everything that's happening, all of our research on current market conditions, if there's any, crypto-related, DeFi-related news, opportunities. So definitely have a read, and then you can see other, important articles that might provide some insight into what's happening in the economy, right? So the last piece that I'll mention is, as you're managing your portfolio and playing around with these tabs, you can also pull up TradingView that we've integrated directly into the app. So you have the ability to actually look at the Bitcoin chart or the Ethereum chart. And very soon, I don't want to talk about a lot of the future things that we're developing, but we are going to be adding the ability for the agent to see these charts as well and visualize your liquidity pool ranges. So it'll make it even easier. It'll provide recommendations and guidance. And none of this is financial advice. We just want to show you what we're doing. And the AI is providing guidance on how to be safe, how to be smart with your portfolio, so that if you have a question at 2 o'clock in the morning, Brandon's asleep, our team's asleep, you still have the ability to ask the agent, and it'll give you a DeFi practitioner grade answer. So with that being said, Brandon, do you want to maybe jump into the first few steps of providing liquidity, how to turn your crypto into cash flow, and we can go from there?
Yeah, absolutely. Let me go ahead and take over the screen share once again. We've been talking about this lately on the channel, talking about the 5 basic steps. So last week in the live stream, we covered the 5 steps, the basic overview of our process. So the process is taking your idle crypto assets. Maybe you have a little Bitcoin, maybe you even have some ETH. I think most people, they don't venture out too far. Their very first crypto purchase usually is going to be Bitcoin. But as I said earlier, that's where it ends. They sign up for a Coinbase account, buy themselves some Bitcoin, and that's it. They just leave the coins on the exchange. Not your keys, not your crypto. Crypto was designed for self-custody. That's kind of the whole point of a decentralized blockchain and a ledger, is that you can actually own these assets on chain, not keep them with Coinbase. Anyway, so the process is going from, hey, I own a little bit of crypto, Bitcoin, ETH, whatever, all the way to the other end of the spectrum is I generate daily cash flow. And this is every day. Millions of people around the world are trading crypto online, on chain. We're not talking about Coinbase, although it's the same model. Millions of people trade crypto inside of Coinbase and generate billions of dollars of fees. Coinbase is a company, and they collect all those trade fees. It's like that, but this is on chain. This is a decentralized exchange as opposed to a centralized exchange. And instead of a company receiving those trade fees, we receive the trade fees. We receive liquidity provider fees. So how do you get from, hey, I have a little crypto, to, hey, I'm generating daily cash flow? So like I said, it's 5 basic steps. The first step is to set up a personal wallet. So self-custody means you have your own personal account on the blockchain, and you control it. You're the only one that controls it. So that's the first step. It's not enough to have some crypto in a Coinbase account. If you want to take advantage of everything that DeFi has to offer, that starts with self-custody. So the first step is just setting up that wallet. We went over it last week. We actually have a full tutorial video on the channel. So right here, if you go to our Overseas DeFi channel, there is a tutorial video from a few months ago. Right there, it explains the full process of setting up your own wallet, i.e. your own personal account. It's kind of like going to the bank, only you don't have to go during business hours. You don't have to fill out any forms. You don't have to bring in your driver's license. You just, in an instant, basically set up your own personal blockchain account. Now that you have your own account, now you can take possession. Maybe for the first time in years, You know, maybe you were lucky enough to buy Bitcoin back when it was $10,000 a coin. Here it is $70,000 a coin, right? But if you never took possession, it's technically not your crypto. So that's the next step. The second step is taking possession. Maybe you don't have any crypto. Some of you watching might not own anything. Maybe you're just starting out, which is, by the way, a great opportunity to join our community. You can completely learn everything that we have to offer, go through the full course. Shouldn't take you longer than 7 days, but you know, you have that 7-day free trial, which I can't remember if you mentioned that or not, Roman. I think we've really lowered the barrier to entry. I mean, you can literally jump into the app, join the community, and just fully kick the tires, watch all the videos, read all of the discussion posts, fully look at your wallet and your position, ping the AI, have full conversations with the AI agent, and you're paying nothing for 7 days. Anyway, that second step of the process is to actually have some assets. So if you already have Bitcoin, you're going to transfer your Bitcoin out of Coinbase and into your own account. If you don't have any crypto, what I like to do, by the way, Roman, is on Coinbase, there's no fee to convert dollars into USDC. If you trade dollars for Bitcoin, you're going to pay a pretty hefty fee. It's more than 1% on Coinbase, in my experience. I haven't done it for ages. But you can actually convert dollars to USDC for free on Coinbase. There aren't any, to my knowledge, there aren't any other exchanges that do that, but Coinbase lets you do that conversion 1-for-1, no fee. And then you can take that USDC and put it in your own wallet and do the swap, do the trade on a decentralized exchange. Literally, the fees on a decentralized exchange are 1/100th, 2 orders of magnitude cheaper.
It's a big difference. And I think you know where I stand with Coinbase. Anytime I have crypto or I procure on Coinbase for whatever reason, I move it off immediately because I don't like anyone else controlling access to my keys. And I just had a bad situation. I was traveling overseas and I was locked out of my Coinbase account and I couldn't access my crypto and missed out on a lot of investments at that point. So please, self-custody. You have full control. You're your own bank when you do this. And like Brandon said, it's very, very cost effective and cheap to do that, way cheaper. So
right. And by the way, you know, self-custody is where everything begins in terms of DeFi. You can't do DeFi, you can't do lending, you can't do borrowing, you can't do providing liquidity and all the rest, all of the beautiful things that we have available to us in DeFi. Can't do any of that on Coinbase. You have to take custody first. So those are the first 2 steps. Set up your wallet and then take custody of your crypto. Once you have custody of your crypto, the next step is to make use of the lending and borrowing protocol. This is a decentralized protocol. What that means is it's a collection of smart contracts where you don't have to rely on some company or some shady investment advisor or anything like that. You're relying on the blockchain, which is public, and you're relying on code, smart contracts. Aave has been around for many years now, never had any issues with being hacked or exploited or anything like that, not directly with Aave. And so when you utilize a decentralized protocol like Aave, it's permissionless. There's no waiting. It's basically instantaneous. Within seconds, you can do the different transactions. And where this really hits new people, Roman, is once they've provided some collateral, they've supplied some tokens, some crypto assets to Aave, the next step is to actually borrow against that collateral, which is kind of a weird thing. And I'll talk about velocity here in a moment. But that moment when they literally just click a button and borrow some crypto, It's instantaneous. You didn't have to fill out a application. You didn't have to check your credit report. You
Best.
didn't have to wait in
Yeah.
line. Nothing. It's instant money. Now, it might seem kind of weird that, okay, we have these assets and we're going to supply them and borrow against it. And by the way, that's step 3 and step 4. Step 3 is supply some of your crypto assets to this decentralized lending and borrowing protocol, and that becomes your collateral. And then step 4 is you can actually borrow against the collateral. So you might be thinking, well, I already have the money. Why would I want to lend it and then borrow less? So the idea and the beauty there is, when I lend, let's say I lend Bitcoin and ETH to Aave, those coins still belong to me. And they're still in the form of coins. If the prices go up, the price appreciation, that belongs to me as well. So if we have, let's say, $10,000 worth of Bitcoin and ETH supplied as collateral, we still have $10,000 working for us. And what I mean by working for us is that is capital that we've invested in these assets. And all of us here around this part of the world, we believe in number go up technology. We believe that Bitcoin will go much higher in price. ETH will go much higher in price in the long run. In the next 1 to 3 years, these prices are going up. And by putting those assets to work in Aave, we're still getting all of those gains. If the prices go up, our collateral value goes up every single dollar. But go ahead.
I was gonna say, it's just, I look at it just like real estate, right? You buy a house, you want it to appreciate in value, but you also want to rent it out. And it's just like getting that HELOC, right? You can borrow money against your house appreciates, and now you have capital to do other things with. So that's the easiest way for me to kind of capture that and understand it.
Yep. And the technical term for that is velocity. So if I have $10,000 invested in Bitcoin and ETH, possibly the prices will go up, and therefore that money is working for me. But when I collateralize it, when I supply it on Aave, and let's say I conservatively borrow $4,000 against that collateral, that would be a pretty conservative loan to value ratio. Now, the 4,000 that I borrowed, that now belongs to me. It comes out of Aave, it comes out of the smart contract and goes into my wallet. And I can do whatever I want to do with that extra $4,000.
Yeah.
What we like to do is take that chunk of borrowed capital and put it into a liquidity position. And now that liquidity position, that's what's going to generate the daily cash flow. So now we have not just 10,000, we have 14,000 that is working for us every day. The 10,000 is going to work for us when the price appreciates. The 4,000 is going to work for us 24/7, as long as we manage that liquidity position, capture the price action, and generate the fees.
Brandon, can you go to the lend borrow section in the app just for 1 second and maybe speak to what, when I learned about this, just blew my mind, which is the fact that you technically never have to pay the borrow back as long as Ethereum and Bitcoin appreciates more.
Yeah.
I thought that was fascinating.
Yeah. And just, I mean, to kind of toot our own horn here, it's so nice to have all of this information in one spot. I don't have to jump around to 15 different websites and 4 different apps and all of that. I can see everything in one spot. And I have literally used this app myself since the moment we developed it. And in particular, I've got a lot of use out of this liquidation test. So to your point, let's switch some things around. So right now, my debt situation, I would say it's a little bit complex, and that's because I've structured my debt in reference in a way that matches and aligns with the current market environment. But that's because we haven't been in a bullish market for the last 6 or 7 months. We've been in a pretty bearish market since October. So let me simplify this a little bit. And this is one of the many great things about this little simulator is let's just make this simpler. Let's say I had 40 ETH, and let's say I had a quarter of a Bitcoin. So there you can see my collateral at today's prices, a little over $100,000. And then let's say that my debt, instead of having wrapped ETH debt and USDC debt, let's just say, let's use that 40% LTV again, which would probably be around $45,000. So, oops, I forgot to zero that out. Pardon me. And you can see right here, my health factor, you can see the LTV. So this is the loan to value ratio. It's how much did you borrow divided by how much collateral do you have? What is the value of your collateral? So loan divided by collateral value, LTV. And so $45,000 divided by $109,000, that's coming out to a 41% LTV. Now, to your point, what happens if we get the rally that we're expecting? I mean, maybe it'll take a year, maybe it'll take 3 years, but all of us around here believe that the dollar will continue to be debased, and Ethereum will continue to be adopted. Bitcoin will continue to be adopted. All of these prices will go up. So let's imagine that the price goes up 40%. And last year, ETH rallied by 260%, Roman. So a 40% rally is pretty conservative, but let's just use that as an example. Now, what happened to my debt? Nothing. I still owe the 45,000 USDC. Now, there is an interest rate on that, so it would probably be, a few $100s of interest, depending on how long it took for this rally to take place. But the point is, my debt didn't increase, but my collateral did. Look at my LTV. I've gone all the way down to 29%. Now, if this has happened, is there any reason to pay back this debt? No. You're still very healthy on this. And as a matter of fact, not only could you theoretically not pay down your debt, you could actually borrow more. As long as you're keeping your LTV in mind and you're thinking about your liquidation price, and you can reverse engineer it. You can say, okay, well, look, my LTV has reduced. I have plenty of collateral. Let me go ahead and borrow another $15,000. So let's push the debt now to 60,000. Still right around 40% LTV. And now I've just been able to pay myself a bonus. If the price keeps going, happy days. If it drops now is when you need to start worrying about liquidation. Okay. So this isn't free money. This is not necessarily, just set it and forget it and life is good and go on. You do have to pay attention to this, and you do have to understand the risks, and you have to mitigate and defend the position if necessary.
But there's a lot of ways you can do that, right? And I think, and not to get into the weeds or anything, but you can also borrow a volatile asset so that when the price does go down, well, so does your debt. So your debt's shrinking. Yes, your collateral shrinking as well, but you're essentially kind of frozen in time. So there's a lot of strategies around this, and we actually teach multiple strategies around this. So
yep, exactly. And that's precisely why my debt is not pure USDC right now. Yep. We've been in a pretty big downtrend, and we can look at the charts. By the way, again, any of you watching, if you have any questions, if we're going too fast or if we're going too slow, or you just have a question about crypto in general, anything, we definitely welcome the questions. I can see there's a few of you tuned in right now, so I appreciate everybody that's tuning in for the live stream. But yeah, there are all sorts of strategies that we have for defending these positions if we need to, right? And you don't necessarily have to put all of your eggs in one basket. You might collateralize just a portion of the assets that you have. If you have one Bitcoin, great. You don't have to put the entire Bitcoin into your lend borrow position. You could put half of it. You could put 2/3 of it, whatever. And that way you have that extra capital in reserve. That's one of our strategies that we teach. Have some reserve assets, right? To where if your position gets in trouble and you start to approach this liquidation threshold, well, now you have some ammunition. You're able to add to your collateral and reduce that LTV a little bit and give yourself some more breathing room. Now, again, the whole reason we're doing this is to increase our velocity. So if you have X number of dollars available to you to invest, you invest those dollars into assets that you believe in. For us, it's Bitcoin and ETH. For you, it might be Solana, it might be SWI or anything like that. But you invest your capital into those assets. That's the whole point of an investment. You buy something and the value goes up, right? So that's the first part of it. The second part of it is once you have those investments, you deploy extra capital, you borrow extra capital to increase your velocity. And this is what we call the DeFi carry trade. So a carry trade has been around for many, many years. And until DeFi, the whole carry trade thing, that was only available to accredited investors. It was only available to the big investment institutions and the big banks. Now in DeFi, you and I can do a DeFi carry trade. So what is a carry trade? A carry trade, very simply, is a situation where you're borrowing money at a relatively low interest rate, and then you're deploying that borrowed money into an opportunity where you're going to earn a relatively large return or a yield. And so to give you an example and to give you some numbers to this, if I borrow capital here on Aave, and here's the interest rates that I'm currently paying. So I'm paying less than 5% on this borrowed USDC and only 3% on the ETH that I've borrowed. So those are the kind of interest rates that we're paying in the carry trade. And then I can take that borrowed capital and I could deploy it into a very, very conservative liquidity position and easily earn maybe 50, 60% per year. And so you're capturing the spread. You're borrowing low, around 5%, and you're earning high, maybe 60%, maybe 80%, maybe even more. And the title of this live stream is 8% a month. I will just show you, this is my current liquidity position on Revert. I manage my positions pretty actively, meaning I adjust my ranges and I follow the price. And my job is to capture as much of the price action as I can. And we can get into that in more detail. But what you see here is, if you look at the logs, I just moved this position yesterday. So it's been about 1 day, a little bit more than 1 day. But if we just do the math on this, you can see my uncollected fees in just over 1 day. I've made about $85. Now, the yields on these liquidity positions, they are variable. Some days there's a lot of volume. You're capturing all of the price action. The yields are really high. Some days there's not much volume. Not many people are trading the assets. Maybe the price escaped your range and you stop earning the fees. So it's going to vary. But if we assume that I'm able to earn $85 every year for an entire year, $85.59 And if we multiply that by 365 days, something went wrong with my calculator there. Oh, that was not right. You make $1,000,000%. So let's try that again. Apologies for the error. So it's a little bit more than $31,000, right? Look at the size of my position, Roman. I have $26,600 deployed. Now, I don't want to get too into the weeds, but this isn't even all of my money. This is $11,000 of borrowed money. So I've amplified, I've increased my velocity on a whole other level here, which, yeah, we don't need to get into the details on that. So it's kind of an advanced play. But those are the headline figures. I've got about 26,000 in this position. And over the course of the last 24, 25 hours, I've made $85. Do the math, and that is over. And you can see it right there. The fee APR on this position so far, based on the last number of hours, about 107%. So that's the kind of thing that we're talking about. And that's the spread that's up for grabs here in DeFi. So that goes all the way back.
Even if it was 3%, right? And you can set a pretty wide range. And I don't want to say be like fully passive, but spend just a few minutes a day managing it, and you can make 30 to 35, 36% a year. And that's fantastic, right? If you look at some of the traditional financial products, like I can't get excited about 10% a year, right? Once you learn about DeFi, it's hard to look at traditional finance any other way. But yeah.
And there's different levels to this. I've been doing this for nearly 5 years. Coming up next month will be my 5-year anniversary in DeFi. May 21st, 2021 was when I first got into DeFi. Anyway, I've been doing this a long time. I teach this for a living. So what I'm doing here with my liquidity position and the way I manage my range, I'm a day trader. I've got a lot of experience reading price action and indicators and all the rest. I'm on level 10. But this isn't rocket science. And one of the great things about our program here and our education is we're going to get you into a liquidity position very quickly. And listen, I've done a lot of different educational opportunities, particularly having to do with trading. For many years, I was getting my chops and trying to learn how to day trade profitably and consistently. I've paid a lot of money to different kind of educational platforms and things like that. And not a single one of them was profitable this quickly. And trading depends on a very disciplined mindset, and nailing the highs, nailing the lows, dealing with the losses, and by the way, watching the charts every day for hours a day. This is managing these liquidity positions it's night and day compared with trading. It certainly helps to have some trading skills, to have the ability to look at a price chart and kind of figure out where price is most likely to go in the near future. But it's not mandatory by any stretch. And what I really like is that somebody can come in and within a few days or a week, they actually are generating money. They're actually generating yield and cash flow from a liquidity position. Now, granted, somebody's not going to go and deploy $26,000 on day one. We're going to start you out small. I recommend going with $100, just to get that proof of concept where you can actually do this. And the second you put that $100 into a liquidity position, you will start earning. And you come back the next day and you're going to see your daily return. And you come back a week later and you're going to see how much you earned on that little $100 over the course of 1 week. And that's when the light bulb is going to come on, and you're going to have that aha moment and you're going to realize I can do this.
We don't have to, it's not a bullseye that we're targeting here, right? It's just we have to get the direction correct. And if this was a situation where you had to be in front of a computer, staring at charts, I just wouldn't be able to do this. I'm not cut out for it. But I spent 7 months earlier this year traveling and just collecting fees every morning, managing my positions, maybe 20, 30 minutes a day. Some days were more intensive, right, depending on what's happening in the market. But overall, it's a fantastic way to earn additional income, to compound, to grow your wealth. Or if you're looking to potentially retire and live off of a nest egg that you've accumulated, you can do a delta neutral position for the most part and collect some really handsome fees. So I love what this brings to the table. And Brandon, we've got about 10 minutes left. I just wanted to give you a heads up.
Sure.
And I don't, just wanted to remind you.
I guess one thing I would like to mention that I just thought of, you talked about accumulation right now, and without getting into technical analysis and where the prices are now and where they're going, suffice it to say, I do believe strongly in Bitcoin. I believe in Ethereum. I do believe that these assets are going much, much higher. And one of the beautiful things about a liquidity position like this particular token pair, this is wrapped ETH paired with USDC. So this is one of the most actively traded pairs in DeFi. And what I mean by that is traders around the world, this isn't limited to the United States. This is a global public blockchain, and people around the world all day, every day, want to trade. And particularly, they want to trade USDC, which is a stable coin. Each token represents $1, with wrapped ETH. And wrapped ETH, by the way, just think of it as Ethereum. It's ETH. It's the oil of the Ethereum ecosystem, right? It's a commodity. And so whenever people trade USDC for Ethereum or vice versa, doesn't matter. It doesn't matter if people are buying or selling. As long as the price is in your range, you're collecting fees on every single trade. Okay, so I like this pair a lot because there's a lot of volume and I can depend on those high yields pretty much 24/7. There will be quiet parts, and volume will drop sometimes. Weekends are always kind of a little bit lower, but for the most part, I can depend on a very nice, consistent, high yield. But wait, there's more. Because when I collect my fees, these are the two tokens I get. So I collect pretty much 50-50. Like if I go and collect these $85 in fees, it's going to be around $42 of USDC and around $42 or $43 of ETH. And it's not always exact, but you're getting both coins. So what I like to do is the USDC, to me, that's my paycheck. I take that, I off-ramp it through Coinbase, I put it into my checking account, and I literally pay my bills with that USDC. Now, if I don't need all of my fees, the ETH part of it, that's my stack. So as the price is low, I'm generating these yields. Essentially, I'm earning free ETH. I'm earning more of the coin that I want to hold for the long run. So I've already got some ETH. I've got a good bit, but every day I'm earning more ETH. So I thought that was worth mentioning because it's something that people don't intrinsically, intuitively understand about providing liquidity is you're receiving those two tokens. So it really doesn't matter which pair, which tokens you choose.
Yeah. I think there's a lot of, everyone's got their own thesis and everyone's got their own beliefs as far as crypto and what assets are going to do well, but it's hard to ignore kind of what's happening macro wise as far as the investment and tokenization from companies like BlackRock that's happening on Ethereum. So I agree with you. Like I do see a world. It could be in 6 months, could be in 12 months, could be in 24 months. But I think there's going to be a pretty significant repricing event across a lot of the assets, especially, knock on wood, the Clarity Act passes. And even if it doesn't, I think these assets are going up. But there's, I think, a lot of opportunity in this space. And, the financial system that we're used to is being rebuilt in a lot of
Yes.
different ways, right? So I think, you know, if you're not in crypto and you're just sitting on the sidelines exploring, I would encourage you to certainly explore this space, because right now is a great opportunity to buy really low and then watch your assets go on a nice tear, I would say, over the next few years. So
Yeah, and we were talking about this a little bit today in the accelerator call, the strategy call. One of the things that just happened yesterday was the FOMC rate decision, right? And so the Fed, as we all know, left rates unchanged, but in particular, it was a pretty hawkish press conference afterwards. And Jay Powell, and no one's talking about, you know, dropping rates. In fact, now the narrative has kind of shifted to raising rates. And so in this current environment, there's just not a lot of liquidity. But the liquidity definitely is coming, and it's just really, it's just a waiting game at this point. The government has to refinance something on the order of $9 trillion this year, based on the average Treasury maturity. There's a lot of fresh money and fresh debt that needs to be pumped into the system very soon. So it's not a matter of if, it's a matter of when at this point. It's just right now, and maybe for the next few months, inflation is still fairly high. The job situation is still kind of holding water, you know, treading water. So there's not a lot of incentive for the Fed to drop rates, for the Fed to pump a bunch of fresh liquidity into the system. But, you know, it's only a matter of time. So it is a great opportunity, in my opinion, of course, not financial advice, to pick up some of these assets. And again, if you're just getting started with this, join the community. It's free for 7 days. You can literally just watch the entire video course. You can ask questions. You can interview. You can have a whole session with the AI and help me to figure this out step by step. And we also do, for the community members, we do a weekly private live stream. So anybody can ask questions right here, right now. But what we're going to shift to is a model where we have the public facing live stream, but then after 30, 45 minutes, we shut it down. We go into the private live stream. And if you're in the community, that's where you get to hammer us with the questions, you know, in real time, get your answer, assuming the AI has not been able to satisfactorily answer your question. So it's a great time to, you know, join the community, learn how all of this works. And by all means, just start small. These percentages that we talk about, you don't have to have $26,000 deployed into a liquidity position to earn 107% APR. This number is irrespective of whatever the size of your position. So if I had $26 in there instead of 26,000, the numbers would still be the same. You know, so DeFi is really, it's a level playing field. Anybody can get involved with any amount of capital. I mean, unless you're talking about, hey, I only have $5 to invest. Well, then you're going to have to spend some time and save up some capital. But if you just have a few $100s, you know, you can make this work, and the percentages are the same for everybody. So it's a level playing field. And I just want to say one other thing along those lines is I had a question in my DMs just yesterday that the guy was saying, you know, I understand your community, it costs, after the free trial, it's $97 a month. What kind of portfolio would I have to have in order to basically pay that cost? And so just round numbers on this, we talked about maybe 8% a month. And you can see right here in black and white, or black and green, this is more than 8% a month. But I'm an advanced practitioner of DeFi, right? But let's just reverse engineer it. So let's say you want to earn $100 a month. Well, $100, if you're earning 8% a month, if you divide that by 0.08, that means if you had roughly $1,250 in a liquidity position, that's going to pay you roughly $100 a month. Now, you would ideally invest in some assets, and your liquidity position is based on borrowed capital. That's the velocity thing we talked about. And so I wouldn't borrow anything more than, let's say, 50%. So if you had $2,500, okay. Now I understand maybe people don't have $2,500 to invest, but if you have $2,500 to invest, you put that into Bitcoin and ETH, collateralize that, borrow your 1,250, put the 1,250 into a liquidity position. There's your tuition. There's your $97 a month cover. Now, if you have more than that, the rest is gravy. So I think that was yeah.
No, I'm just gonna say, as far as the community goes, great place to start, because like you have everything you need to learn, to progress with your education. And then for those investors who do have, let's say $15,000, $20,000 all the way up to $1 million plus, the accelerator is great because you're in a position where you can make some substantial income to support your lifestyle or to compound aggressively pretty quickly, right? I would say, I think it probably takes maybe a month to really understand what you're doing, maybe 2 months, and then really start scaling. But I think, like you said, Brandon, starting off with $100, kicking the tires, understanding how the mechanics work, and then slowly scaling your position up is the way to do it. And that's something that you can certainly do with the program. But yeah.
And the key difference is, just so people know, between the community and the accelerator that we have. Mainly the main difference is the real human contact. So you have 4 different Zoom calls every week. When you're in the accelerator, you have a weekly workshop. These are the intense lessons on each part of setting up your portfolio and your wallet and your lending and your borrowing, your liquidity, doing swaps, all the rest of it. So an intense 2-hour workshop every week. Then we have our community call, or the strategy session. That's what we do on Thursdays. This is a complete picture of what's the market situation, what's the macroeconomic situation right now, what's this latest news event all about. Like we've talked about the quantum threat on Bitcoin, for example. We've talked about Ethereum and the different the ZK EVM that they've built. So we do deep dives into different protocols and different blockchains and different opportunities within DeFi. And then we also have like extra lessons. We have discussions about, like we've been talking about the Aave situation lately. We talked about BitTensor Tau. So you have the community call on Thursdays, talk about all kinds of different interesting things going on in the market, in the news, in different new protocols and blockchains and opportunities within DeFi. Open office hours. This is a huge one. I love my Wednesday calls. I've got members tuning in for that. They're bringing all of their questions. We're having rich conversations and discussions and how-tos and you name it. Anything that you're getting stuck on, the office hours is the place to go. Another full 2-hour Zoom call with me where you can talk about anything and everything related to your portfolio and what you're going through. And then we have our hangout on Fridays, which is just a low key. We call it DeFi and Coffee. You can bring your questions. I'm more than happy to help people on the Friday morning call. But the idea there is everybody just gets to hang out.
We talk a lot about AI lately.
Yeah,
too.
I was going to say, we usually talk about AI.
So both Brandon and I are very well versed in this space, and we use AI for DeFi as well. But there's a difference between having tools that just look cool and don't really add any value, that are just shiny, and something like what we've built, because everything that we're doing here, we've built with an outcome. And that outcome is, how do we help get you earning cash flow as quickly as possible and as safely as possible? So we talk about all of it. We show you all the different tools, enable you as much as we can. Yeah. So
I'm sure people have experienced, you know, pay a chunk of money and get this ebook, and pay something and join this community, and pay something and do this educational course, and what they're all over the place, you know, trading, whatever you're trying to learn how to do.
yeah.
I promise you, in our educational opportunity, this is not just another educational opportunity. We're going to equip you in a very short period of time to literally make money. You are going to start earning fees in a liquidity position. I would say no more than 2 weeks into it.
Yeah.
You know, you're going to be making money, and there's no other educational opportunity out there, I think, that can make that you know, promise to people who want to go ahead and take advantage of the education.
Yeah,
So
absolutely.
it's really different. At least in my experience, it is. It was always,
Yeah.
oh, okay.
The return on investment is pretty quick, and
yeah, it's right there.
So yeah. But Brandon, this was great. I'm happy we had a chance to have me on at least. I know you did most of the talking, but I love your passion for everything that you do, and I think you did a fantastic job. So I think it's a good place for us to end here.
Yep, very good. Thanks everybody for tuning in.
You.
We're gonna do this regularly, so every Thursday, 6 p.m. Eastern. You know, subscribe to the channel. Obviously, turn on those notifications so you know when we're going live. We're trying to release different long form videos, more of the kind of tutorial type videos as well. A couple of those in the last couple of weeks to watch on the channel. But yeah, thank you very much for tuning in. If you're watching the recorded version, thanks for dropping by. Make sure to leave a comment down below, like the video, and we'll see you guys see you next time.
Thank you.
Thank you.